So, hi everybody. Welcome to Nite with a focus on fundraising for XR startups. Thank you all for joining us on Zoom and in VR, as well as on YouTube. I hope you all are healthy and keeping it sane with all the craziness around the world. Nite is a series of online meetups organized by AR.org, which is a nonprofit with a mission to advance AR in order to advance humanity. Today, AWE and HTC Vive X are excited to dedicate this meetup to XR startups, founders, to you guys who are seeking investments. By joining Nites, you actually join a global network of AR professionals that meet now in 20 cities around the world. You can check out some of the other meetups in the link above. And to answer your questions about fundraising and to help you navigate the special environment we're all in right now, we've assembled a very experienced panel of investors and entrepreneurs to tackle questions such as what are investors looking for right now in XR and how to find investors during a pandemic. We'll look at what are the differences in raising in the US versus EU and how will the next 12 months look like. We'll wrap up with a bunch of tips for fundraising. And of course, we're here to answer your questions. So please start thinking about some of your questions and feel free to post it in the chat. But before we start, I want to thank our sponsor here today, Dave Haynes from HTC Vive X. Thank you, Dave, everybody. And I also want to mention Super Ventures, which is introducing something very timely and very relevant for this audience. It's a 6-week course to help XR startups prepare for fundraising, refining strategy, your pitch, your go-to-market, and really maximizing your chances for raising your next fund. Check it out at the link below. All right, let's go. We'll start with a quick intro to our speakers, then review the latest investment trends and get right into the panel conversations. I think we have a really great representation from across the entire XR investment ecosystem. We have a strategic investor in XR and our sponsor today, Dave Haynes from Vive X in the UK. Give it up for Dave. Dave, you want to say hi?
Sorry, hello, welcome, and thanks, sorry, I'm looking forward to the discussion.
Awesome. We also have a top-tier VC with numerous investments and exits in AR and VR, both in the US and in Europe. Hopefully, Nico has joined us. Nico, are you with us?
Yeah, hi everyone. Ori, thank you for the invite. Great to be among so many friends, and thank you all for the attention.
Thank you, Nico. And we also have an angel investor in XR, and I think that could help shed some light on the syndicates that are out there and are becoming a great resource for early stage investments. Put your hands together for Ashley Flukas. Ashley, want to say hi?
Hello, everyone. Thank you guys for having me and excited to participate in the discussion today.
Thank you, Ashley. And we also have a 2x XR founder with a recent exit to Niantic Labs, CEO of 6D.ai. Give it up for Matt Meisnix.
Yeah, hi everyone. Nice to be here.
Thank you, Matt, for joining us. All right, now we'll start looking at some of the latest investment trends. So, the entire world has been struggling with a devastating pandemic this year, but there is some silver linings. People were expecting a baby boom like after World War II, but actually the work from home is creating a startup boom. We've seen a record number of 2.1 million new businesses that started in the US this year. And there's also an overall investment growth. VCs have raised a record $69 billion year to date. XR adoption, as I think many of us are seeing, is accelerating in 2020, and it's becoming a banner year for XR. And it's interesting to know that the foundation for XR, a lot of the platforms are becoming sort of a commodity because they're being offered by tech giants. So startups are looking to offer higher value on top of these platforms with business solutions and are becoming more sector specific in e-commerce, communications, training, and of course, gaming. And yet, despite the pandemic and the state of XR today, it's important to remember that the fundamentals for investment decisions remain the same as always. The statistics, I think, are always important to show that 9 out of 10 startups fail. And the top reasons are typically market or no market need for this product, cash situation, the team, and the competition. And here are some.
That's an interesting slide, and sorry for cutting you off. In my mind, there's only one reason why companies fail: they run out of money. And often, they run out of money because indeed there's no market need, or the team doesn't get along, and they can't raise more. That's what I've seen, at least so far.
That's true. Yeah. So here are some fresh investment stats that we've received from Superdata just from yesterday. And I guess the first thing that we are seeing is that the investments have obviously peaked in 2017, in the hype years, but have fallen due to slower adoption than expected of XR. And we've seen that in 2017, investors have put more dollars towards AR and MR than VR. And that's due to the greater potential that they're seeing in currently deploying with mainstream on mobile AR. And when you compare hardware versus software, we're seeing that hardware's share of investment has grown actually since a low point in 2018. VR has reached a stage where the vast majority of hardware, with a few notable exceptions, is now made by tech giants. However, if you exclude investments in Magic Leap over the last couple of years, investments in AR devices has actually grown. In terms of software investments versus enterprise versus consumer, we're seeing actually the share of investments in the enterprise growing steadily. And to wrap it up, here are some notable investments in 2020. By the way, all of these will be available with links, so you can actually follow a lot of these announcements for these investments rounds. But what we're seeing is that, first of all, there's more late-stage investments, and that's, I guess, a sign of maturity of the industry. And about a similar amount of investments in hardware and software, which may be surprising that at this point we're still seeing a lot of investments in hardware. And in VR, a lot of the investments are in enterprise training, which is also not surprising. And I also want to mention that regardless of the fundraising that is happening, we have two unicorns in XR that we should not forget, Niantic and Snapchat. And I'm mentioning that because the more time goes, we see that they're doubling down on AR as their key differentiator and a growth engine. And that's something we should always keep in mind. It's kind of can pull the entire industry and the investments around it. So that's all the time I had to cover some of the investment trends. Now let's hear a little bit more from David Haynes, who will give us the perspective of Vive X on this investment landscape right now. Dave, stage is yours.
Hi, thanks, Ori. So yeah, just a very quick introduction, and I'll keep this short because we have some great guests and we want to dive into the discussion. But for those who don't know me, I'm Dave. I'm actually based in Europe, here in the UK. And if anyone wants to reach me about anything they hear later or during this discussion, you can get me on dave_haynes@htc.com or Haynes_Dave on Twitter. And next slide. So yeah, I think a lot of people, think of Vive as just being a hardware company, somebody that makes, great hardware. I'm not here to tell you about that, but just to tell you that there is, more to the Vive ecosystem than that, whether it's Viveport, Vive Studios, or even our Vive Arts initiative. And what I'm going to talk about today is Vive X. Again, I'm not going to talk about these other points. I'm not here to do a sales pitch. So, if any of you guys are looking for introductions to my colleagues that can cover those spaces, feel free to email, and happy to be helpful to anyone who's out there. Next slide. And yeah, hopefully most of you on this call, educated audience, you're hopefully aware of Vive X. We launched Vive X in 2016, which is probably, I guess, in VR and AR time, that's nearly 3 generations ago. So it seems like a long time. But we're still dedicated to this. We launched the program really out of a need, to help accelerate and grow the market, which is good for everybody, but is also, good for Vive at the same time. Next slide. And that still remains at the, the core part of our mission for investing. So, we're here to really try and accelerate the global XR ecosystem by supporting startups. We think, in any new ecosystem, any new computing platform, you need content, you need hardware, you need, different elements, but you really need startups that are innovating. So we provide founders with investment. We invest up to around 150K, so it's early stage, but we also, alongside that cash, provide a lot of strategic support, expertise, and network. Next slide. I cover Europe. I have 2 colleagues in the US. I know we have an audience through AWE that kind of is also based in the US. So again, if you want to reach out to those guys, then I can signpost you in the right direction. If anyone's joining from elsewhere, I also have colleagues in Tel Aviv and out in the APAC region as well. Next slide. And yeah, we invest early stage. So like I said, this is just a small check, typically once you are kind of post-launch, but before you get to Series A. HTC does also invest as HTC. That's typically in more strategic investments, where Vive X, it's more about seeding the ecosystem and helping new things grow. Next slide. Next slide. And in terms of what we do look at, we have a portfolio of over 100 companies now. I'd say predominantly, the majority obviously, is in VR, but also a number of AR companies. But I would really like to, just kind of say to everyone, we do look at, kind of the broad spectrum of what I would call spatial computing, but what we call Vive reality, which is, the convergence of a number of these different technologies, whether it's VR, 5G, AI, real-time 3D. I think there's a really interesting set of, next billion-dollar companies that sit not in any of these particular categories, but across them. And next slide. So things that I'm looking for in particular at the moment, we've done a lot of enterprise investments in 2019, 2020. I've seen a lot of training, so looking for other use cases in enterprise AR. Obviously with COVID, collaboration has really kind of taken off as you can start to work from home and bring the office to the home, but also the field or the factory to the home, and also anything around productivity. I think as we spend more time, I've noticed I've spent every day in a headset now, and as we have AR glasses more in our future in the next couple of years, I think tools that are not just something where my employee is paying me to wear a headset, but also is something that's helping me with my own productivity. So anything in those areas is interesting. And consumer have a particular interest at the moment for all things digital fashion, virtual entertainment. Before Vive, I was an investor in Wave, who are doing great things in the virtual music concert. So we're looking for the wave of other interesting entertainment verticals. And then obviously as Vive, we're looking for kind of infrastructure stuff, and that could be straightforward developer tools, but we've also invested in things like brain computer interface companies. Next slide. So yeah, that's it. I'm going to keep it short. Feel free to get in touch. If you are, this is for kind of more for European founders only. If you want to get some time on my calendar, you just need to go to that link, bit.ly/vivex-OH. And yeah, happy to chat more with you. Next slide. And lastly, for those who do have, a VR headset or an Android device at home, or you can even be downloading the PC client if you don't have either of those, we are actually live streaming this directly in a platform called Engage, which is a portfolio company of ours. So you can watch this with other people, and then we're going to have a fun hour of networking afterwards. So Zoom is notoriously bad for networking. VR is amazing for networking. You can have those corridor chats and the little kind of group huddles in a corner of a room. So yeah, do join us. If you're joining with either desktop or a standalone headset like a Quest or a Focus Plus, just make sure to wear some headphones so we don't get any kind of echo and stuff in the room. And the password for the room, you'll see it when you go into Engage, and the password is AWE. Great, excellent. I'm going to hand it back over to Ori now, but thanks for listening. Really appreciate it.
You're on mute, Ori.
Ori, I think you're on mute.
Ari, I think you're on mute.
Okay.
The joys of Zoom conferences.
How's that better? All right. So folks, now we're getting to the fun part where we have the panel conversation and answer your questions. So once again, if you have questions you'd like to ask the panel, feel free to start putting it in the chat. We'll start with a few that we've prepared in advance and then get into your questions. All right, so first question to everyone on the panel is really trying to understand what VCs are looking for in XR right now, and also what are you not looking at right now. So we'll start with Nico, if you're ready.
Sure. So it's a very interesting year, as the two of you mentioned before, because a lot more people are starting companies. People have more time as they're breaking their habits. And also in the workplace, companies have had to find new ways to see their teams, collaborate, make progress, do some work, and not just, be lazy bums at home. So on the back of that, we're seeing a number of opportunities in the enterprise space. Especially these are collaboration plays across distributed teams who are co-designing new products. So that's a category that we're excited about. Most of them tend to be software plays. Of course, all these companies rely on the continued R&D investment from the major platforms, because if that doesn't keep happening, then some of these companies are gonna run short in the future. And then on the consumer side, it's been a fascinating year. And I'm saying it's a fascinating year because we're seeing companies like Snap really release a number of new compelling products that bring the vision together. We're seeing companies like Niantic with the acquisition of 60 also make the future today a lot more clear. And a number of the gaming companies are becoming what I would describe as very cool XR platforms for even today, given that you can date others, attend events, play some games, but also they feel like you're part of a future and futuristic world. So maybe I stop here. I can go deeper discussing, specific companies or sectors where we're actively making investments in later on.
That's a great start. Dave, you kind of mentioned as a whole, what are the things that HTC Vive X is looking for? Anything to add more specifically? Or maybe also things that you've seen too much of it and you're not so keen on seeing more?
Yeah, I think there's some verticals that, are very kind of, certainly within VR, have been done a lot. But I think that it's quite a nuance, because actually we're seeing a lot of things that were pitched to us back in 2016, where actually I think maybe 2020, 2021, the technology has matured and so, maybe some of those things will have their day again. We've been looking a lot at things like, volumetric capture and, holographic streaming and things like that. And there was a lot of money pumped into that in the early days with the hype, but actually, the technology has improved and there is a demand for those types of technologies in the market. So yeah, there are some that are coming around. I'd say that there are some, categories like training. It's a very powerful use case for both VR and AR. And therefore, I think we have at least 7 or 8 companies doing training in the portfolio. So I think there it's really looking at, how, certainly at early stage, how are those companies differentiating? Are they addressing a certain vertical or a certain problem? But actually a lot of those that we've seen a lot at kind of pre-seed and seed, I'm hoping now the investors who are at Series A and Series B, they're kind of seeing these things for the first time now. And it's probably a good time to get into that space as we go from, kind of companies rolling out POCs to actually fully deploying within their organizations.
Thank you, Dave. So Ashley, we were seeing a very small number of women or Black founders that are able to raise funding these days, up until today. So I guess the question for you, first of all, how are you kind of addressing this, and what do you think investors should do, or founders that are coming with this background? How should they approach fundraising?
Yeah, so that's a fair point. I think we're all pretty well versed on how poor the statistics are around diverse founders getting funded across all industries, let alone AR and VR. But I do think we're actually at an interesting moment, and we'll see whether it's a flash in the pan or more than just lip service, where you do have a number of funds who are making commitments and doing it in a way that it's better than it has been in the past, because one of the worst things you can do for funding diverse founders is think of it as charity, as opposed to really looking at it from an ROI perspective, and kind of how that plays into a portfolio for thinking of the future demographics of the country. But kind of one of the ways that I address it, and been working with a number of VC funds to address it, is I think to fix the pipeline problem, it's also about who's writing the check. So that was part of the impetus as well for me starting my angel syndicate, which has about 700 LPs. And actually, even though I invest across all verticals, including some AR and XR, actually most of the companies that I've funded have had a person of color, a woman, an immigrant, or an LGBTQ founder. And I think that's a product of me as a check writer. Not that I lead with a diversity mandate, but I don't have that filtering bias to not fund companies that have diverse founders. And I actually think the data bears out, particularly immigrant founders tend to have the best returns from an investor perspective. But I think from, like I said, the perspective of a founder, I think you also have to be thinking about that as well when you're thinking about how to get funded, is figuring out who these diverse check writers are, going to groups like yourself, going to accelerators, maybe aligning yourself with funds who've made that commitment. There's also, for example, a new initiative that came out in the last few months called the Diversity Rider. It was started by a Latinx principal at Act One Ventures, and he's got about 30 funds that have signed on to that, including some prominent ones like Graycroft and Bain and First Round Capital. It's about finding those folks and who they're partnering with. Another kind of good avenue, without kind of jumping the shark in terms of what we'll talk about in other ways of funding, is also there's quite a diverse set of scout funds as well. So you see a lot of folks scouting for some of these funds, and a lot of them actually tend to be more diverse, more receptive. I actually got sent a VR investment about 2 weeks ago from a Black scout who scouts for both Lightspeed and Canaan, and he was happy to do it. So that's also a good potential segue to getting funded.
Awesome, thank you, Ashley. It's definitely something that every investor should think about, because I think the general statement is that diversity is not just the right thing to do; it's actually better for the business, and especially for AR and VR. I mean, if we want to get this technology to be closer to reality, closer to what's happening in the world, then it must be more diverse, and we need to start with the founders. So Matt, speaking of founders, you were raising, and actually were in discussion for an acquisition when the pandemic started. But actually I want to ask you about kind of the time before that. So when you were kind of trying to fundraise, what are the things that investors were looking for, and how did you kind of navigate your company towards that?
Yeah, so it's I'm not sure where to start, but yeah, we looked at raising, before we decided to sell, and we talked to a whole bunch of investors about that, opportunity. And what I think founders really need to be aware of or take really seriously is really the market and the timing of the market. And 6D was one of the more high profile early stage AR companies. We had a lot of attention. Everyone kind of all the potential acquirers were aware of us, but that alone wasn't enough to just investors don't back a dream or a vision like beyond that very first like pre-seed type of pitch. So we were really working on our go-to-market, and that wasn't as clear as we wished it was. We weren't really confident about how quickly the market would come to us, and so that really shaped the way that investors, not just looked at us. It was more a case of they looked at the space, and then within that market, looked at who's the most interesting company in that market. And so we generally had no trouble being the most interesting company, in that market. But the harder problem was you know, how attractive is this space right now in 2019? And that was a much harder story to sell. So, you know, one of the factors, I guess, in us deciding to sell was kind of weighing that up, both, you know, not just, you know, because investors were sort of harder to convince about the space, but that was reality about the space. And we were thinking ourselves, like, look, we could keep going here for another couple of years, but 2 years down the track, where are we going to be? You know, is the probability of being in a better place 2 years' time high enough to offset the value in like taking a decent exit now and then getting that chance to kind of reset and try something new? And so that, you know, that question around market timing and how real things are, beyond, you know, your vision can be correct. You can have a really good idea, a great premise, everything hangs together. But if it's still 2 years out, then it may not be the best use of your time for that 2 years.
Thank you, Matt. We'll definitely get back to that. I want to switch to a question that I think is on everybody's mind. You know, traditionally fundraising is a roadshow. You go out on the road, you meet investors, you talk to them, and then you get a much better sense of where you are and likelihood of getting investments. But now we're all in lockdown. So panelists, what are your tips for founders on how to go about finding investors and pitching to them in the best way possible? Dave, you want to start?
Yeah, I can take that. So, well, a couple of things here. One is, I mean, it depends what you're pitching, but I've had a couple of companies pitch me recently where they've actually pitched me in their product. So one was doing a 3D content creation tool. They actually built their deck like inside the tool, and then we went in and we could run through it. That was pretty amazing. I had another company that was doing something around virtual production who, you know, they just spun up a session, you know, in a browser. I then jumped to my VR headset, and again, we had the pitch meeting fully in VR. And it takes me back. I mean, I mentioned Wave earlier, but Adam, the founder there, who's an amazing, amazing founder and very good at, fundraising. When they were out raising, I think it was the seed or the Series A, but they actually built a version of the Wave just to go and pitch investors in that kind of, explain the product. And I think that is one of the challenges, when you're building something in AR, VR, or you have, speaking to a lens company the other day, there are some things that you really need to see and try the product to understand the magic of it. So yeah, just really think about how you can be creative. And then I think the second thing is, in many ways, I mean, it's a disadvantage because you can't build the relationships with those investors over a period of time. But actually, and it'd be interesting to see how the other investors feel, I would say I'm probably taking more meetings with more people because it's easier to do in Zoom. So the caveat to that is once you show up, you really need to kind of, capture the imagination. But I would love to hear, Ashley or Nico's view on that, because they must be in a similar position of having a lot of pitches over Zoom.
Yeah, Ashley, so you work a lot with angel investors and syndicates. How would you recommend founders to find those angel lists and to engage with them?
Yeah, so that's a great question. And Dave, to your point, I think in the Zoom world, I'm on more pitches than ever because you can do this in a highly efficient and scalable way and cross geographies and time zones in a way that you can't in the real world. So, the other flip side of, not having, the difficulty sometimes with actually getting a demonstration of the product is I think you're able to reach people in a way that may not have been possible, just a year ago. And in terms of your direct question, Ori, of how to find those angels, folks will often hear me preach about the Angel List platform, which is where I run my syndicate, but you're kind of having this, you've kind of got these rising groups of super angels who are building tremendous networks on the platform. And you can literally go on the website, kind of sign up and poke around. You can search syndicates. You can even search syndicates by vertical and find people who are open to that kind of investing and look them up that way. You've also got this new product on AngelList of rolling funds, where you've kind of got folks who might be ex-founders or who've had some success syndicating capital before, who now have these rolling funds, which basically means they're subscribing folks on a quarterly basis. And I'm definitely seeing some openness as far as those kind of investments. Not to plug Dave again here, but another way that I'm starting to see a lot of stuff is via accelerators and those kind of relationships. So, another thing that I've been doing over the past month and we'll be finishing up over the next few weeks is On Deck. So On Deck is this kind of whole universe of different things. So they've got a founders program, an angel program, which I'm doing, a writing program, a no-code program, and don't be surprised if they have something in and around this space in the very near future. But the benefit of those kind of ecosystems is also the connection to angel investors, connections to funds that have relationships with those kind of accelerators. And that can be, one of the easiest, the best ways to get an introduction. And I think kind of more, probably more so than most verticals, this is one of the ones that kind of lends itself to the, I'm a big proponent of cold outreach, but I think this is one of those ones where the warm outreach can matter quite a bit because, to Dave's point, if you're an investor, it's kind of hard to hear someone or, someone sends you a deck about something in this space here, and it can feel a bit like noise or difficult to kind of see, what stands out about it. But if it's coming through you warm through these accelerators, or folks like yourself, Corey, who deeply understand that field, and there's been some level of screening, it is actually much easier to meet investors that way going through these types of programs and platforms.
Thank you, Ashley. So Nico, so when you have a founder with you on a Zoom call, how would you recommend them to conduct that pitch?
I mean, by now, I think everybody should be an expert on Zoom or Google Meet if they want the change, right? I think the key thing, as Dave was mentioning, is to do something that's really, memorable, differentiated, something that when I leave that Zoom, I do my next one, the following one, the 8 after that, and then at the end of the evening, I'm like, what did I learn today? Who did I meet? Was there anything really cool during today's VC shopping exercise that we should be investing in? There should be something memorable. So whatever that is, right? This could be the person's personality. This could be the differentiated product. This could be the captivating conversation that we had, the momentum of the business, like whatever that is. In today's world where everybody is behind their computer screen, and as Ashley was saying, like it's really easy, like for all of us to take like 50 meetings. You don't travel, you're bored at home, or you're just staying at home, so you take more meetings than normal. But then at the end of the week, you're like, oh shit, what did I learn? Who was memorable? So do something that's really, really memorable and unique. Now, how do you do that? Well, you got to rehearse your pitch quite a few times over. Make sure that it doesn't run over. Make sure that's like short, straight to the point, almost like a YC demo day pitch, right? 6 slides. What is the problem? What's our solution? Why is it growing so quickly? Why are you the best team out there? Why now? If you just do this kind of slides, maybe over there's something, particularly captivating. If you're brave,
not
do the
different
demo.
than usual days of doing pitches, basically.
That's correct. Yes, that's correct.
All right.
Matt, say one.
Just kind of mindful of time. Yeah, Dave, you want to say something?
One tip as well, just qualify who you're talking to. Certainly in Europe, just figure out early if the investor is someone that needs like kind of educating on kind of spatial XR and VR and stuff like that. And then you can usually kind of skip a lot and get straight to the meat, or try and work hard to do the education up front before you even get on the call.
So Matt, quickly, tips for how to find investors in these days.
Finding them, I don't think it's different now than it was like a year ago. I mean, our office at 6D was right on South Park, where there must have been like 40 or 50 like VC firms within 2 blocks, and all of the finding people was, you know, email, social, friends, word of mouth. You know, you weren't out like knocking on doors. So I think all those, you know, those channels still apply. I think what's different now is, you know, definitely to what Nico alluded to, like the investors are, you know, just getting a lot more, you know, shorter pitches on, you know, just because of the Zoom as the format. So yeah, I think what's changed is after you meet them, not so much finding someone. So, you know, use all the same, you know, the advice I don't think has changed, you know, since the pandemic, to actually find and make that first like email connection or connection where they said, yeah, I'm interested in learning more. Let's set up a meeting.
And Matt, have you seen a difference between how investors in the EU versus the US react, or kind of different set of expectations?
Yeah, I mean, I don't know post-pandemic, because 6D, you know, sold right as it happened, but we were, you know, I guess we had obviously investors here in the US and investors in the UK. We were Oxford spin-out. You know, Oxford invested in us, as well as a couple of smaller UK funds. There's definitely a difference. I think, like Dave mentioned too, there's a bit more qualification needed in the UK or EU, just to you know, get a sense of how much they might know already, where in the US you're more likely to get introduced to someone who's already interested or familiar with the space. I felt that the EU were a bit less aggressive in their you know, not just in terms of like valuation and all that stuff, but just in the sense of, oh, American investors expected you to conquer the world, where European investors expected you to conquer Europe. And, you know, there was a little bit of a difference in, you know, ambition there. I felt in terms of just like expertise and good advice and the ability to kind of help you run your business, there wasn't a lot of difference between one or the other, but, in the UK, there was sort of a slightly more of an expectation on like diligence information. Like it seemed to be like one stage earlier. The stuff that you'd need for an A round in the US would kind of be expected for a seed round. Like not necessarily the same progress, but the same like information pack. Like here's our finances and here's all the diligence information that a US investor just may not worry about at an earlier stage.
Cool. Nico, you invested, I think, both in the US and in Europe. Is there kind of...
That's correct.
Have you seen like a different behavior of the fundraising process in either US or Europe?
I think Europe is catching up fast. I think the pandemic is helping. Most importantly, the level of ambition that founders have is at an all-time high. We do love this. Some of the founders in Europe, unfortunately for them, they come from a more cash-starved ecosystem. And if they've already raised a friends or family round or a first seed round, you see some like stupid, annoying terms. In some instances, they've sold like half of their company for like a few $100,000. Avoid that. If you're a founder in a cash-starved space, try your best, find investors that seem to be resonating with you. They've invested in similar companies as yours, in better ecosystems, and reach out to them. In a Zoom-first world, all of us are one video chat away. So I think today Europe is catching up fast, Tori, and we're very bullish in Europe, and we've started making seed investments and mid-stage investments in Europe over the last few years, and more to come.
Thank you. And Ashley, I mean, when you look at the AngelList syndicates, do you see, I mean, first of all, do you see a lot of European investors in your US syndicates and vice versa?
Yeah, so in my syndicate, to my pleasant surprise, since I launched it, I have investors from all over, from Canada, Europe, India, Pakistan, Asia, you name it. There's a mix of everything, which makes it interesting as well from a company perspective in terms of if you're able to kind of get this diverse coalition of folks who invest in across geographies and expertise to kind of evangelize about your product. And then even from a funding standpoint, I mean, I've definitely funded, a number of cross-border investments as well. And I've seen a number of European investments on the platform, not specifically European within AR and XR, but it's entirely possible.
Thank you. All right, let's switch to looking forward. So really kind of quickly from each one of the panelists, how do you expect the next 12 months to look like in terms of areas of interest that could grow, the ability to actually secure funding? Let's start with Nico. How do you see the next 12 months?
I mean, unless something extraordinary happens, and if you had asked the same question a year ago, would any of us say that the COVID pandemic is going to happen? Probably not, right? So unless something absolutely extraordinary happens, at least for the next 6 months, I expect more of the same. Capital freely flowing into VC firms and then cheaply flowing into tech startups. So founders, this is your time. Come to us, take our money. You have the opportunity to fund your dreams. It's never been a better time to be a founder who is ambitious and is considering raising VC capital to fund your future dreams. So I think that's all going to continue because of the low interest rate environment and tech promising good returns and high growth opportunities. Now, there are companies that are getting to benefit from all the COVID tailwinds. So are you in training, education, telehealth, enterprise security, collaboration and productivity of all sorts, remote work? Awesome. Now's your time. Raise capital ASAP.
Thank you, Nico. Dave, do you expect the appetite for investing in XR in the next 12 months to increase or decrease, or how do you see that happening?
Yeah, good question. And I love Nico's sentiment there. I think, now is actually a good time. One thing that I would love to see more of in Europe is, more people like Ashley who can fund companies, angels and syndicates, because I think we have a lot of talent in Europe that maybe sticks at a safe job with a larger company, or, there's so much talent in XR and in adjacent technologies like gaming and 3D and industrial design and things like that. So I think we definitely need more of that kind of, those angels and, also kind of, other founders supporting other founders like you have now in the Valley. We need more of that in Europe. In terms of the next 12 months, I definitely see an upward shift in investor appetite and interest. So certainly in Europe, I have a lot more investors reaching out to me, about deals they're reviewing. I think we have got these tailwinds for this industry now. And, like Nico said, seize the moment now, like the vaccines are on their way. There was another UK vaccine, announced yesterday. So, things will be returning more to normal towards the end of next year. So I think what'll be really interesting is at the end, like if we look at the end of 2021, are we all still talking about, the new normal or the next normal, or, have some of those trends, been set back? I think that's, I would personally believe, I think we have reset a number of habits, which will stick with us. But yeah, so there has been an acceleration. Let's see how that goes. But the more capital we can get into the system now, the better for the whole ecosystem, I think.
Thank you, Dave. So before we open it up for questions from our audience, quick tips from each one of the panelists that you can give today for founders. Matt, what are kind of your top tips?
Well, this is what I'm thinking about as I'm thinking about new ideas and possibly, fundraising for something there is I'm not thinking about starting an XR company, an AR company. I'm like Nico said, there's no such thing as an XR market. XR is a technology, but there's great markets right now in collaboration, in enterprise, in gaming, in entertainment. And these are all markets that I think some of these technologies that are associated with XR, whether it's computer vision or 3D or new sensors on devices, new capabilities, are are making new opportunities possible, and definitely the way the world has changed has sort of created new, I think, market spaces for some of these new use cases to capture. So I'm thinking a lot about that type of change that's happened in the world, and where are the ways to apply that, like today, not like here's a vision of what the world's going to be like in 10 years, but here's how something can actually work today for people.
Cool. Ashley, key tips for founders raising money today.
Yeah, so I think I alluded to kind of my view on that, which is thinking a bit outside of the box in terms of some of these accelerators, going to angels, angel groups, and that kind of thing. I think that's the right way to go. I also think piggybacking off of what Matt said is leading with the idea in the pitch of kind of not XR for XR's sake, but how are you tackling a massive problem, preferably in a hotter sector right now, and how XR helps solve that problem, but isn't kind of the sole focus on things. So I mean, I've seen a couple of impressive fundings recently, like fitness, for example, because that's so hot right now in a COVID world. But it wasn't, the focus kind of wasn't on like just the XR, but kind of focusing on kind of the cultural and whatever and other shifts around some of these hotter verticals that XR can be adjacent to. And I think another thing interesting in terms of thinking outside the box, which might not be answering the question directly, but Ori, I like that you kind of mentioned Niantic and Snap earlier. So one thing that I'm really curious about and would love to see is folks doing more to kind of build on top of Snap, particularly since Snap is doing more with its own accelerator, and to invest in this space and all the things that can be built upon that, and which actually might help with penetration on the consumer side of things.
Thank you. Dave, additional tips for founders?
Yeah, I would say, if you're starting something new, just really build up a network around you of kind of mentors, other founders. I think what's really exciting about this space now is, just looking at XR, there's now founders that have done this journey from start to finish, once or twice over. So there is a really interesting recycling of talent. So go out, build up those networks, build up your bench for your kind of next round of hires once you've raised money. And I would just say to echo Matt, I think we talk a lot about XR and all these different names, but really, for me, this is something bigger. This is like a fundamental shift in computing where physical and virtual worlds are converging, and actually, whether that's something you're experiencing that through a AR headset or through a mobile, or that's kind of completely irrelevant. There's just this really interesting, rich kind of stew of like different things that are going on, and I think we're at that stage where we were when you suddenly had things like mobile, 4G, smartphones in every camera, where all of a sudden these completely new use cases, like the next billion-dollar companies, the next Instagram, Uber, Salesforces, like I think we're at that stage where you can start one of those. If you're starting a business in 2021, you entirely can be building like, one of this next generation of billion-dollar businesses. So just, be ambitious with it and kind of set your sights on where we're going. Thank you, Dave.
Awesome. Folks, so this is then where we open it up for questions from the audience. I see already a bunch of questions coming in. You can continue to place them in the chat, or if you want to ask it via video, raise your hand and we'll give you the floor. I see a bunch of questions around kind of founders questioning whether there are investments in consumer AR or VR. We've seen the charts, which are basically showing that there's more investment in enterprise, and that trend continues. But there's still quite a bit in consumers. So anyone from the panel want to address that question around investment in consumer-oriented AR and VR software?
I think for VR, it's been a pretty cool year because you saw companies in the fitness space, as Ashley was highlighting, that saw really good momentum now that people can go out to the gym and they can use VR to work out, and they're paying for this content or for this session. So that's one area where number of companies have raised money. In the gaming front, we continue to see companies that now have access to a deeper audience and larger audience of gamers. And as a result, they can post more revenue. And as a result, they now can justify investing more in the production of higher quality games. And now VCs and angels are more eager to fund this stuff than what they were before because there's more to make. And then there are a number of UGC media approaches, almost like, Roblox, Meet, social network, that at the time maybe sound a little bit more futuristic, but at the seed stage, these are the forward-looking investments to make, in my mind, today in consumer AR, because they could morph into something interesting, especially as the headset availability becomes more widespread.
Cool, thank you. So there's a question around really early stage startups, pre-revenue startups. The question is, what are investors looking for in such an early stage when the product is not really out there, there's no revenue? What would be your recommendation for how to pitch at that stage, what to show?
We're looking for somebody like Matt, hopefully, who can pitch a very detailed picture of the future that we're going to be like, oh shit, if 1% of what just heard comes true, we want to be part of that picture. And if we don't do it and one of our competitors invests and they become filthy rich, it's going to be even worse. So if there's nothing, it's like, pre-product, pre-team, one person or two people max, it's all about the story, the vision, the timing. So we're looking for good, crisp communicators who understand who the problem in hand is, who the customer that they're serving is, and why now is the timing for building this company.
Great answer, thank you. So there's a question around the type of investors that founders should go after. I mean, there's a small group of investors that have already invested in AR and VR, already have some understanding. And there's a lot of investors out there that have really no idea of what this market is. But we're still seeing kind of new investors coming in to the picture and making investments. So how important is it to have strong background in AR and VR for investors before you select them as a target for pitching?
I'll jump in here because I actually consciously went through this process when we were thinking about fundraising for 6D. And obviously I'm thinking about it again, I spent a lot of time thinking about what type of company could this turn into and what type of, challenges, both how much capital would we need down the road if it takes off, as well as, what sort of competitors we'd have and what sort of market it might be. And, our belief was that 6D, could become a huge company that was a competitor to the big platforms. And if that was the case, then we wanted to make sure that the investors we had backing us were, had a fund that could write a big check at some point down the road, and also had, both the individual partner, but the entire partnership, could help us navigate, that type of competitive market with large public company competitors. And, we had the option to raise money from like a bunch of, angels or smaller funds where no one would have really had much control or influence over what I did. And that, that could be attractive. You think, well, I got no one telling me what to do. I got no one sort of trying to change my mind. But I felt that type of setup where you keep a lot of control, you're making a bet on the market that you know best about the market you're going into, and that you don't really need any help, or you don't think you're going to need any help. And so I kind of came to the sort of realization back then was that when thinking about what type of investor is going to be best for you, don't think about it as where do I get money from? Think about it as recruiting. Like, who would I want to recruit to my company? And you'd never be able to hire an investor to join you as someone who was like a VP at some huge company or someone who's had like a decade of experience sort of navigating, markets and things. But by having them invest in you, you're effectively recruiting them to your team, and you're going to work together. And the more, the better that person is that joins your team, you obviously want to give them, you want to give them some voice in the direction of the company, because you believe that, well, this person can help together. We can grow this idea bigger than it was. So, I get asked that question a lot from other founders that I've talked to, and that's my thinking about it. And I know if my next company, if I start something and my ambition is just build a nice little business and in a space I know, and whatever, grow it to be cash flow positive and just earn a good living off the back of it, then I'd find a way just to do that with a couple of angels and bootstrap as much as I can. But if I thought, well, there's something here that if it works, it could be huge, but oh my God, I don't really know how to compete for real against Facebook or Apple or someone like that, then I'd want a large fund, a partner who can help me sort of pull that strategy, the relationships, the sort of broader awareness of how to deal with that market, and that would be invaluable and something I don't know how to do myself.
Thank you, Matt. There's a follow-up question from Zev, and he's saying, there are many VCs that have been burnt with the initial hype and investment round in 2015 through 2017. So his question is, how do you convince VCs that now it's kind of a different time, and now we're a different level of maturity of the whole industry, and the past busts are not necessarily indicating of what's happening next? Dave, you want to answer that?
Yeah, I mean, I think if you're just starting out and you're raising pre-seed seed, then you just have to optimize your time to find the believers. Kind of screen someone out. If they aren't believed, your time is probably better off spent with people who can be convinced than spending all of your time trying to convince. I mean, develop a strong set of arguments for sure. And there are a strong set of arguments out there, but at early stage, I think you need to move on. I mean, when it comes to later, even for seed rounds, but certainly for Series A, ultimately, this isn't about, VR, this is about your metrics. Have you found, a customer base that's buying your product? If you're a consumer, have you got engagement with the product? So, ultimately, just like any other company, you can hold up and say, look, this is happening. These are the people that are using my product. But I think at the early stage, go out and find the believers. I think there are enough of us out there, for you to, secure your first, $500,000 or $1 million, and kind of, the naysayers will have to miss out. But it's a very good question, and it's obviously a big challenge. So if anyone has good answers, then send me the answers as well.
The metaphor I kind of work with there is it's you're kissing frogs, and you're like the princess kissing a frog, and taking more time for a deeper, more passionate kiss is not going to turn it into a prince. You're better off just moving on and finding another frog. And that's probably the metaphor I keep in mind if someone doesn't respond to the space.
Cool metaphor. Thank you, Matt. So there's a question from Oliver, and that's about companies that had to pivot, especially, location-based VR companies that, their business basically disappeared over the pandemic and they decided to do something else. When they pitch, should they pitch only the new thing, only the pivot, or also talk about the strength that they've built in the past and kind of paint a kind of a broader picture? What would you recommend? Are you all stumped?
Oh, I didn't know if you were going to call on someone. So
go ahead, Ashley.
I think this is particularly interesting, and also kind of segues into what I would have touched on the last question. So one of my VR investments is Sandbox Vr, and they've been very hard, because they're location based, they've been very hard hit by the pandemic, but in focusing on the positive aspects of that, and how do you get folks who maybe ordinarily wouldn't be super strategic in terms of having a deep background in this space, I think it's still what they're suffering from COVID aside, a great example of kind of the power of storytelling. So if you read any of the articles on Sandbox VR, they basically had the entire Andreessen Horowitz partnership meet them in an In-N-Out burger and sit there with a napkin and literally write out terms for a tremendous round. And I think where they succeeded and what's really powerful for folks who are fundraising in this space, particularly when you're talking to the uninitiated, is the storytelling. And I think that's what most impressed their investors, including myself, was kind of the narrative they were weaving about, VR as a next wave of entertainment, and how they could use the location to kind of bring that into the mainstream. And they were actually well on their way to establish some great product market fit before all of this happened. And so now they're, I guess, in a similar boat to a lot of folks, which is, how do you keep getting funded? How do you stay alive? How do you discuss the pivot while we're in this time? And my own view from an investor perspective is still more of a long game, right? So COVID is not going to last forever. So at this point, I'm not too focused on companies that are only thinking about the COVID world. If you have a strategy that's going to work when we're at some semblance of normal, it's obviously okay to talk about the pivot and how you're going to kind of get going in the meantime, but I don't think you necessarily have to shy away from kind of what your product roadmap or what that looks like when we do have some semblance of normalcy and returning back to being able to enable location-based stuff.
Thank you, Ashley. There's a question from Vincent about how to pitch a studio. So, it's a startup or a company that doesn't create new tech, but it does help with transforming and digitizing industries and advertising. How would you guys on the panel recommend for a studio to pitch, if at all?
I think the challenge with studios is, it's really margin and scalability. At the end of the day, you're selling, your time. You may price it per day or per hour or per project, but you're always going to have this issue of, there's like a cap on how much you can charge for someone's time, which affects your margins compared to like a software product, which has kind of got 100% margin at some point. And then how do you scale that up, or how do you scale it up quickly, even more specifically? And so if you can somehow show that, we can increase our margins to kind of software scale, gross margins, and we can scale the revenue faster than we can add people to our team, then you might have a good opportunity to sort of pitch as a VC fundable business. But if you can't really address that question, and nearly all studios can't, it becomes, the maths just becomes very hard to make work for the sort of returns that a VC fund would be looking for.
Thank you, Matt.
It doesn't mean it's a bad business. It just means it's not probably a fit for a VC fund.
Right. So folks, that's the time we had for this part of the event. Next, we continue in VR. And Dave, maybe you want to just kind of recap how we get there and what's the plan for the next hour?
Yeah, indeed. So, like I said, networking is better done in, virtual worlds in VR or on your desktop. So we have, there's an application called Engage. You can download that on Steam, on Viveport, on the Quest Store. There's also a desktop client, which you can just download direct off. If you just type Engage VR, you'll find that. If you are joining with a headset like a Quest, or if you're on desktop, because you've got open audio feeding back into the mic, just make sure if you can grab a pair of headphones or turn the volume right down, that will definitely help. But if you haven't even been in there before, definitely spend a few minutes downloading and getting ready for that. And yeah, I'll definitely be in there for as long as people are in there for the next hour or so, if people want to join.
Awesome. Thank you, Dave. We'll see you all in VR. Until then, I want to thank our panelists today. Thank Dave Haynes from Vive X UK, Nico Bonazis, General Catalyst, Matt, CEO of 6D.ai, and Ashley Flukas, our angel investor on the panel today. Thank you all very much. And thank you all for joining us and asking great questions. We hope to continue the conversation on VR, or reach out to us. We can help connect you with investors, as well as if you are into kind of joining the course that we have. I think that could also help a lot of startups increase their chances of raising funds. So once again, thank you, everybody. Let's see one last look at everybody here. Hey.
Hi.
See you on Zoom. And good luck fundraising, everybody. Take care. We'll see you in VR in a bit.